Assalamu alaikum warahmatullah. Welcome to ABC of Islamic Finance. Today we are discussing a very important topic, which is why profit and not interest. Yes, it looks simple, but then it is the major reason why Islamic finance. Interest is seen as exploitative in the sense that it is based on money given as loan, irrespective of whatever that money is used for. Once that money is given out as loan, it is assumed some money is working and interest will be accruing. And also the interest that accrue will also accrue another interest, which means forever that money is working until it is paid fully together with the accrued interest. On the other hand, when you talk of profits, this is as a result of transaction, imagine negotiated and agreed between parties on a sell transaction. And forever, that amount that is absolute is what is agreed upon. And it is seen as non-exploitative because a borrower can always have issues of not having the ability to pay. And some amount will be outstanding with him as debt. And the lender can give kind of a concession or can give time for some amount to be paid. But in the case of interest, as I said earlier, that amount is working. So insofar as you didn't pay, it is working. So even if you come for negotiation, you only negotiate maybe reduction in the interest rate or some other things, but those things are still going on. Once you are asked why profit and not interest, the first thing that will come to mind is all the Abrahamic religions forbid this interest. Islam forbid interest in various verses of the Holy Quran. So also various verses in the Holy Bible prohibit sin. Judaism also, and also common sense, in the sense that it is seen as exploitative because the rich always just become richer and the poor become more poorer, because whoever don't have the ability to pay in good time will be impoverished further because they have to find those monies to pay. In transactions, it is clearly stated, when I transact with you on profit, I can do a transaction where I can take part of your risk to share profits in a transaction. And then if there is loss, we also bear some loss when we do a partnership transaction, which result of partnership is profit or loss. So the financier can also share the loss, as well as also the entrepreneur also share loss. While on the other hand, if you do interest, the whole burden is on the entrepreneur. If the business succeeds, he pays down. If it doesn't succeed, then he gets more impoverished. Nobody share its own risk. So there's a business sense that, okay, in this sense, you see that profit is more like it for business than just interest, which the lender tries as much as possible to make sure that they exonerate themselves from sharing any risk associated with transaction, while they share only the loss. One important thing is, when we are talking about profits, there must be an item of transaction, that is an asset that is involved, either a physical asset or asset that will be brought to existence, or a service that will be benefited. In essence, there won't be any transaction that profit can come out without having value. In interest, someone can borrow just to waste, and he has to pay that interest, which means It doesn't matter the financial transaction or the benefit to the owner. You can just borrow money and you can decide not to even use the money and you will still have to pay the interest. While on the other hand, as I said, you see, when you're talking of profits, there has to be item of transaction. There has to be something of usufruct, something that will benefit the parties. That is the parties that is buying. You are buying something because you want it and you have agreed upon a price and you are ready to pay that price. And this guy is selling because he has ownership risk, he has the asset risk, and the asset in his possession, or is going to come to his possession, or the asset is going to be manufactured. All these are things that influence what profit is. But when you talk of interest, the major subject is cash. The major subject is cash, irrespective of what is behind the cash. So that's another important distinction. That is, in profits, we have the assets, and in interest, we only have the debts, which is only the liquid cash.